Okay, good morning, good afternoon, good evening from wherever you're watching me from. Welcome back everybody and welcome back to the channel. I'm Tetowas and I will be your trainer for this very short moment, very short minute. So if you're here, you're all welcome. Today we'll be looking at one of my best trading strategies from my 10 years of trading experience. I've been trading a lot of strategies, but we'll be looking at one of my best trading strategies that I've been trading. If you have not subscribed yet to my channel, please take a few moments to just hit the subscribe button and hit the like button to subscribe to my channel. If you are already an old subscriber, then just hit the like button for the algorithm to push my video through well, okay? So I'll give you some 3 seconds to do that. Okay, well done. Thank you for subscribing to the channel. Now, let's begin. So I have been trading for around 10 years now, which is more than a decade, and I have traded a lot of trading strategies and a lot of setups. Actually, as a day trader, this is what I do for a living. I have been trading different setups, different criteria. I've seen different setups in the market. I've seen so much of different varieties of different kinds of trading strategies in the market. But with all, I'll be showing you my favorite for today. I remember one of my students asked me some time ago, all the strategies I've been teaching them, which one is my favorite? But I refused to answer because I didn't want him to focus only on that strategy, because if you give a student that mindset, that idea, the student might forget about all the other strategies and focus only on that strategies. But it's not also a good idea. My goal is to train everyone to grasp the whole concept of trading, to get some tools in their toolbox so that they can trade successfully as day traders. So I decided not to answer that student, but today I'm going to reveal it here for you all to see which one is actually my favorite and which one do I love to trade and which one am I happy to always trade. So let's begin. We know that markets can only move in 3 directions. Market can either move upwards, right? Can either move upwards, or market can either move downwards. That's very simple. And sometimes market can also range. So these are only the 3 modes the market move. Market doesn't move anyway, it moves only in these 3 modes. So the question is, how do we buy within this, or how do we trade within these 3 modes? Because as day traders, our role is to find opportunities along the trend of the market and buy and make some profit. So if the market is in this mode, we have to trade with the market mode. If the market is in this mode, we trade with the market mode. If the market is in a downtrend, we trade in downtrend mode. So as traders, how do we identify these opportunities to trade? So there are so many ways you can do that, and that is one of the strategies I'll be teaching today. So markets, let me clean this thing for now. Let's focus on only trending market. In the market, there are actually 2 main strategies. There are trending strategies and there are reversal strategies. So in terms of trending strategies, we trade along with the trend. We look for opportunities somewhere along the market trend and then we trade. So let's assume that the market is trending this way. We can either look for opportunities here or there or there or there or anywhere along the trend and then we trade. But as professionals, we do not advise that you take trade anywhere. You must take trade where you have high probability. So if the market is trending, the market can either move in this direction or can move in this direction. Look at something. Power move, retrace, move, consolidate, and continue on with the trend. So anytime market is trending, these are the 2 modes the market will trend. Either it's trending, making higher highs, either the market is making higher highs, making higher highs, right? Then market continues to trend. Or the market will make higher high, consolidate, and make another high. Instead of having a strong pullback, it will consolidate. Consolidating means that it's going to play around for some time, or it's going to chop, or it's going to range for some time before now it moves upwards to continue with the trend. So as traders, our job is to identify opportunities along this trend because we are price action traders. So if you're a price action trader, after whatever information indicator has given you, it's also your job to identify the exact place you have to enter and the exact place you have to trade. So this strategy I will be teaching you is breakout continuation trading strategy. I've talked of this strategy in one of my old videos, but today I want to explain it very well to you. So the breakout continuation trading strategy is a trend following strategy where we use to trade when the market is trending. And as I said, if the market is trending, you can either buy pullbacks here and there. Let's say you are trading alongside moving averages. So we have moving averages. You can either buy when the market comes back to hit any of the moving average and then you take your trade. But market doesn't only play this way. Market sometimes also play this way. And even this one is more predictable than this mode. That's why I prefer this strategy the most. So how do we trade it? After the market makes a high, retrace high and consolidate, we wait for the market to break out of the consolidation area. And then when the market retraces back to the area, gives us a confirmation. Now we join the trend upwards. So now you get a scenario now. So let me explain again. Let's assume market is moving. So power move, retrace, other movements, and begin to consolidate. Instead of retracing, it consolidates. Now we wait for the market to break out of this consolidation, and when the market breaks and makes a pullback, now you see that this area becomes a very strong area for the market to just break through easily like that. It doesn't mostly happen. So what we have to do is that as traders, we just wait for the market to come back to the area and use the same consolidation area as our platform to set our stop loss. Then we take the market, we join the trend upwards. So you see, as professional traders, the first thing you have to check is where is going to be my stop loss. Is my stop loss going to be at a safer place? Newbies think of how much they can make in the market, how much they can make. Hey, how much? Where can I reach? Where? How far can I reach? Wow, I can take all this profit. But as professional traders, any professional trader who is successful always think of where is my stop loss first. So if you check in all our live trading videos, we always check our stop loss first. All the live trading videos, we set our stop loss first. Do you know why? Because your stop loss is the most important thing to protect your capital. You should never draw down your capital as a trader. If you do that, you are not even a trader. You are now beginning. You still have a lot to learn. So never draw down your capital as a trader. So as a trader, you set your stop loss behind this consolidation. You take your profits there, and your entry will be when you find confirmation. Your entry will be somewhere here. So assuming that, let's say your stop loss, you decide to set stop loss of, let's say, $100. Then your risk reward should always be 1:2, which is twice of $100, which is going to be $200. It's going to be your risk reward. So if you have a small account, you can trade like this. If your account is bigger and you are really a professional, then you can risk, let's say your risk is $500. Then, which means your take profit target is going to be what? It's going to be $1,000, right? So $1,000. This is as simple as ABCD. So this is the strategy. You wait for a break in the consolidation area, and then you wait for a confirmation pattern and you take the trade. The same happens in downtrends. Most people, when you explain the uptrend to them and they get the concept, when it comes to downtrend, because the chart has turned upside down, they get confused. So the same happens in downtrend. Market is moving, power move, retrace, power move, now begin to consolidate. So we draw our line, wait for the market to break through the consolidation zone, and if the market retraces back, now gives us a confirmation, we take the market and we join the trend downwards. So this is the most important areas we are looking for. The consolidating zone, the area where we have strong support for the market to even hit our stop loss out. So our take profit target will be here, our entry will be here, our stop loss will be there behind the consolidation. So we are behind strong bar. So we can trade this strategy when the market is either trending upwards or trending downwards. Now, let me show you real examples on the chart. Okay, so on this same chart that we are looking at, we could see some things on the chart. What do we see? We see candlesticks. What else do we see? We also see moving average. You see some lines. These lines are called moving averages. So this is 100 moving average, 100 EMA. This is 50 EMA. 50 EMA, and these are just candlesticks. Why don't I have plenty indicators on my chart? Because the purpose of these indicators is just to show me the direction of the market. Because if the moving averages are sloping downwards, it means the market is trending downwards. Very simple. So on this same chart, if you want to trade this chart, what are you going to do as a price action trader? The first criteria is identify if the market is on a downtrend or if the market is trending. Is the market trending? And the answer is yes, the market is trending. How do you know the market is trending? The market is trending downwards, right? It's obvious that the market is trending downwards. So if the market is trending, then where are the areas where you should look for opportunities? You can look for opportunities around the moving averages, but that is not what we are going to look at for today. We are looking at for how to find the breakout continuation pattern. So the market is trending downwards, so power move, retrace, power move, retracement, right? And break out of the consolidation zone. This is what you're looking for. Can you find this on the charts? Let's see. We could see the market is moving downwards. So move, retrace, move, and you could see that this area becomes consolidation zone. Now, most of you didn't expect this, right? Good. So you could see that at this zone, the market made a strong consolidation at this area. Can you see? Let me use this instead. Market made strong consolidation at this area. So where is the consolidation? Support area, another support area here, another support area here. And what happened? The market broke out of the support area. What are you looking for? Wait for the market to come back to the zone, give us a confirmation pattern. What are these confirmation patterns? Either a bullish pin bar or evening star pattern or bullish engulfing pattern. When the market gives us a confirmation pattern, now it's time for us to take our trade. So from here, if we are to enter here, we would have entered after the pin bar close or after this bearish engulfing pattern closed. This is a bearish engulfing pattern. So that will be our entry. Where will be our stop loss? Our stop loss cannot be all the way here because this consolidation is very huge. So our stop loss is behind a good resistance point. For instance, if you have the moving average here, let me clean all these things out. For instance, if you have the moving average here, then if our entry is on this candle, our stop loss can be behind any of the moving average, so that at least we have a strong resistance. Our take profit target is going to be twice of our stop loss, which is 182. So our take profit target would have been here on this candle. So you see, which means if your take profit target is 400, your risk should always be what? 200. Very simple, and you take the trade. So now can you see the setup? So breakout, it retrace, and now move downwards. Can you see? Let me recap again. So this is the empty chart. What are you supposed to look for? Look for trending market. So the market is trending downwards. We know it's trending downwards, so we don't need to draw this again. Now, what else are you going to look for? Power move, retrace, consolidation area. And now when the market break out of the consolidation area, for instance, let's say the market, this is a consolidation area. Market breaks out of this whole consolidation area and pulls back again. So here you could see that market broke out, pulls back again, give us a confirmation pattern, and then we take the market downwards. Where are we supposed to enter? After the candle close? Where should be the stop loss? Behind the pattern. Where should be a take profit target? 1:2 risk reward. So if you are risking $300, if you are risking $300 to take this trade, which means your take profit target should be what? Always should be 600, right? It should be 1:2 risk reward. You should never change your risk reward. If your account is very small and you're listening to me and you can risk 50, then what should be your risk reward? Your risk reward should be 100. That's very simple, right? Good. Let's look for another example on another chart. Okay, so this is another chart, and this chart is Euro JPY. Let me still return back to the old color. This one is cool. Euro JPY, and we are on M15. I forgot to tell you, this strategy can be traded on M15 or can be traded on H1. Now, what are you supposed to look for? You're supposed to look for first trending markets. Is the market trending? Yes, because the moving averages are trending downwards. What else do you look for? You look for consolidated area, right? So market made a pull, now consolidated, and you could see supports, supports, supports. So we draw our support lines. Here. Now we wait for what? We wait for breakout. So fortunately the market also broke out. Now when the market reverse, we're looking for a confirmation pattern, a pin bar or any engulfing pattern. Then we join the trend downwards. So where should you take your profit? Your stop loss should be behind. Stop loss should be behind. Entry here. Take profit target there. And it's 1:2 risk reward. Very simple. But you see, if you don't structure your chart like this, you might not even see the opportunity to trade. Without all these things, were you able to identify the opportunity, guys? Without all these things, would you be able to identify the opportunity? Yes, it's very simple. See, the market is trending downwards and made a consolidation, equal consolidation area. Can't you see? It's very simple, right? So you draw your line using a trend line, and when the market breaks, you wait for opportunity to enter. When the market returns, and you take your profit down. This is very simple, right? Let's go to another example. For the next chart, I'm going to let you identify it first before I speak. Okay. Fortunately, you guys have already done this mark here, so you have already spotted it. But tell me, where will be the entry? Yes. Where will be the entry? This is also Euro JPY, the same chart M15. And what will be the entry? So first criteria, market should be trending downwards, right? Is the market trending downwards? Yes, market is trending downwards. What is the second criteria? Second criteria, look for consolidated areas along the trend. These are all consolidated areas. Can you see? Yes, very nice consolidated areas. So what else are you supposed to look for? Look for breakouts when it occurs. So breakout occurred in a consolidated area. Market pullback gave us a pin bar. This is evening star pattern. Or even if you miss here, there's another opportunity at this side. This is bearish engulfing, and you enter your trade. So you enter your trade here, stop loss behind the pattern, take profit target 1:2, and you make your profit. These patterns are very easy to trade here, easy to identify. That's why I love them the most. And they're not actually complicated. As simple as drawing your moving averages, and they will show themselves. So now, do you get it now? Are you following? Let's move on to one more example, last example, and this one you will determine where the entry should be. Okay, so this is uptrend. So same Euro JPY charts, and you could see we are on the same M15. So yes, where are we supposed to enter? Where is the opportunity? Is it here? Where is the consolidation? Is it here? No, it's not there. Where is it, guys? Can you find it? Okay, so let me explain. First criteria, what's happening? Is the market trending? Yes, market is trending because moving averages are facing upwards. Okay, next criteria, look for consolidated areas along the trend. So you could see power move, we trace market consolidated around the trend. Now we look for a breakout in the consolidated area. So here is our line. There was a breakout. Market reverse gave us a bullish engulfing pattern. We took the trade. Very simple. Your entry should be here. Stop loss there. Take profit target 1:2. That's all, and you have a winning trade. This is very simple. You get it? So trading this strategy is very easy. That's why it's my favorite. So what I'll do is that I'll urge you to go to your charts. Okay, open empty charts and try to identify these opportunities. Open to a place where the market is trending. And I said these moving averages are, this is 100 moving average, so you can plot it on your chart. This is 50 moving average. You can plot it also on your chart. And this is what I'll be using every time. Sometimes I use 20, but sometimes the 20 is too noisy. It's very close to the market and it keeps making noise. So I don't like using the 20 moving average. So open your chart, open an empty chart, plot your moving averages, and scroll to a point where the market is trending. When you see the market trending, what are you supposed to do? You look for the opportunities along the consolidated areas and see if you can spot whatever I was talking about. Then when the market comes back like this, you say, okay, that is where I was supposed to enter and join the market upwards. Very simple trading strategy. This is called the breakout continuation trading strategy. It's one of my favorite strategy because it's simple to trade. You don't need to be thinking too much. You don't need to be analyzing too much. As simple as ABC, and you can trade this strategy. So that will be all for this video. I'm Mr. Owas, and if you enjoyed the video so far, kindly hit the subscribe button and don't forget to like the video. Come back every time to watch such videos here on this channel. Until then, take care of yourself and see you next time. Bye.